Hi, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. So today, our webinar's title is Investing in Structured Warrants. So my name is Shen Chu. I'm the moderator for this webinar. So welcome, everybody. Now, structured warrants are leveraged financial instruments that can help us to achieve our financial goals and objectives. So it can help us to magnify our returns if we get the direction right. But of course, if we get the direction wrong, it can also destroy our equity quite fast. So it's very important for us to understand what are structured warrants before we blindly trade them. So today, we all are very lucky because we have invited a renowned structured warrants issuer to come here to share a view about the A to Z in structured warrants. All right. So as usual, disclaimer, whatever I share today is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities here in this webinar. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. Is that okay? Excellent. So allow me to briefly introduce our speaker today. And he is none other than the Associate Director of Equity Derivative Group from CIMB Bank. Okay, he is Tan Yiman. Okay, so Mr. Tan Yiman joined CIMB Retail Broking Department as a Customer Service Officer in April 2011. In September 2016, he joined CIMB's Equity Derivative Group, where he is responsible for the sales and marketing of structured warrants. So Yiman had also conducted more than 50 public seminars and webinars on structured warrants in the past 5 years. So Yiman, welcome to join our webinar today.
Yeah, hi everyone.
We are very glad to be able to invite you to our webinar this time. So thank you so much for spending your precious evening with us.
Yeah.
All right. So let me hand over the control to you.
Yeah, sure.
All right, over to you.
Okay. Okay, maybe let me share the slide first.
Yes.
Okay. So today we are going to cover a few topics. Okay, the first one, we're going to uncover the myth of structured warrants. And also I'm going to guide you through on the basic of structured warrant, like what are structured warrants and why you should consider invest in structured warrant. The third topic that we're going to cover today is the factor behind warrant prices. Okay, and also what are the common mistakes in selecting structured warrant and how professional trader invest in structured warrant. And also the most important thing we want to talk about today is implied volatility. Okay, and also the last topic is I'm going to cover is understanding corporate action. Okay, how it's going to affect warrants and the expiry process. All right. So
looks very solid, yeah. Solid content. Would you want to go full screen?
Yeah. Oh, hold on.
Full screen mode. Yes.
Okay, sure. Yeah. Before I start this session, the first session, right? Okay, just now I think Shane already introduced me. So I would also like to take this opportunity to thank Bursa Malaysia for organizing this event to all our investors, and also thanks for Shane. Okay, a very good evening to all of you. Okay, when I study in the diploma or when I'm in college, right, before I join the bank, okay, I have already started to invest in stock market when I'm still studying in college that time. And I discovered call warrant, okay, when I was practicing all this investment in stock market. Okay, so I'm pretty sure all of you have heard lots of story or myth about structured warrant, all right? And maybe some of you have never actually invested in warrant before and you want to find out more. And probably some of your friends will tell you lots of stories, right? I'm sure you heard some of the myth. So the first myth that I'm going to get you through is some of the investors said that third-party structured warrant issuer try to exploit money out of warrant investor. Okay, and this perception, right, is actually not true. Okay, because when a structured warrant issuer sell call warrants, okay, we need to buy the underlying instrument to hash the call warrant that we sold. So we cannot just blindly sell the warrant to the investor without doing anything and just collect the money. So this perception is not true. And if let's say we does not hash the call warrant that we sold, right, the warrant issuer will be exposed to unlimited losses caused by the increase in the underlying instrument price. Okay, so whenever you buy the warrant from the issuer, we need to buy the underlying shares. Okay, so next time when you heard anyone else telling you this myth, then I'm sure that you already have a better explanation to them. All right. So the second myth is that structured warrant issuer hopes that underlying instrument prices to go down. Okay, but in fact, as a third-party structured warrant issuers, right, we do not take any directional view of the underlying instrument price. Okay, instead, we actually try to achieve a neutral position. Okay, and when we issue this structured warrants, right, it is actually just an alternative trading instrument, okay, which provide to the investor to invest. Okay, and also to this structured warrant can limit the downside risk while retaining the upside potential of the underlying instrument. Okay, so you have a very limited downside risk and also unlimited upside risk. And the proceeds from the sales of structured warrants, right, are actually being used to partially fund the purchase of the underlying instrument. Okay, just now we said when we sell call warrant, we need to buy the underlying instrument. So whenever you bought the structured warrant from us, we will use the proceeds, okay, to buy this underlying instrument and also to use for the listing expenses of the warrant and other frictional costs. Okay, so the third myth is, I think you also heard that sometimes your friend probably would tell you that structured warrant issuer actually trying to issue warrants in order for them to dispose of the underlying instrument. And this perception is also not true, because a structured warrant issuer will buy and sell the underlying instrument to hash our position during the tenure of the structured warrant. And first of all, okay, you need to know when actually structured warrant issuer will sell the underlying instrument. Okay, so we will sell the underlying instrument when the price of the underlying instrument goes down and when we are buying back the call warrant, okay, from the investor, or the call warrant is expiring soon. So we will actually buy back the warrant, and after we bought back all the warrants, right, then we will start selling back the underlying instrument to unhash our position. And we will buy the underlying instrument whenever the price of the underlying instrument going up. Okay, and we are selling our call warrants. So when we sell the call warrant at that time, we need to buy more underlying instrument. Okay, it's just as simple as that. So myth number 4 is when actually structured warrant issue warrants at higher exercise price. Okay, some people say that the warrant issuer actually trying to cash out the underlying instrument at higher prices. Okay, but there is a trade-off between exercise price of the warrant and the warrant price. Okay, because assuming all other factors remain constant, right, the higher the exercise price of a call warrant, okay, the lower is the call warrant price. And if let's say the lower the exercise price, okay, that we determine for this warrant, we will need to sell the warrant at a higher price. Okay, so we will not just set a high exercise price in order for us to cash out at a higher price for the underlying instrument. Okay, and we determine the exercise price based on the affordability. Okay, first of all, it's the affordability of the investor. Okay, because if let's say we set the warrant exercise price at very low, then the warrant price will be higher, and whether or not investor can afford to buy the warrant is also our also in our consideration as well. Okay, some people say that structured warrant is an illiquid instrument. Okay, but that's not true also. Okay, because as a issuer of all CIMB issue structured warrant, we are also the designated market maker. Okay, for all CIMB issue structured warrant. So as a market maker, right, we need to maintain a very tight bid and ask spread. Okay, for all our warrant, in order for investor to easily buy and sell back the warrant. Okay, however, you need to take note that if, let's say, the liquidity of the underlying instrument is a bit illiquid, okay, then you will see that the bid ask spread of the warrant, okay, may be a bit wider than usual, okay. So it is also depending on the liquidity of the underlying instrument, okay. So the final myth, okay, the sixth myth is that some people still think that structured warrants have infinite lifespan, okay. But before you invest in warrant, okay, you need to always remember that all structured warrants have a finite lifespan, okay. It will expire at some point, okay. So you need to always check the expiry date of the structured warrant. Actually, recently also, we still received some call from investor, okay, asking why the warrant actually disappear from their portfolio. You know, in your trading platform, you can see all your portfolio, right? And then one day, this investor actually call us and say, "Hey, Iman, how come the warrant no longer in my screen?" Then we went and checked. Only we found out that that warrant is already expired, and unfortunately, that warrant expired out of the money. So we cannot I mean the investor also didn't notice about this, and this is also partly because he listened to his friend, okay, and he just bought that warrant, okay, because his friend told him that it's good. So whenever you invest in a stock market, be it is a mother shares or warrant, make sure you check everything before you invest, okay. So I will go through in this next session, I will go through the basic and what are structured warrants and why you should invest in structured warrants. All right. So a structured warrant is actually a leveraged financial security which provide exposure to the underlying instrument for a fraction of the underlying instrument price. So, for example, some of the share price that is very high, like KLK 20 over ringgit, okay, you may not able to buy the mother shares, right? Then what you can do is you can choose consider to buy structured warrant, okay, to get the exposure. So structured warrant can actually be issued over not just a single share, okay. We can also issue warrants on ETF, index, okay. Index is quite popular in Malaysia as well, like the FBM KLCI index warrants and also the Hang Seng index warrant, or a basket of shares. Instead of tracking just one share, okay, a warrant can also track a basket of share, multiple shares performance, okay. But it's until now, I mean, at the moment, we are not issuing any warrant on a basket of shares, okay. So types of structured warrants, okay, there are two types of structured warrants. The most famous one should be call warrants, okay. Call warrant is a very active trading in Bursa market, okay. And over the past few years, we have saw the trading volume on structured warrant is increasing, okay. Especially when in 2019 we experienced the glove stock prices boom, okay. So we saw a huge trading volume surge in call warrants. Okay, so call warrant price will actually increase when the value of the underlying instrument increases. Okay, this is very simple and straightforward. Okay, the second type of structured warrant is put warrant. Okay, put warrant price will decrease when the value of the underlying instrument decreases. Okay, it's the opposite of call warrants. Okay, now sometimes we receive some investor calls and asking us what is the warrant WA or WB means, okay. They thought those company warrant are actually issued by us, but it is not. It's two different things, okay. The difference between, I will show you the difference between structured warrants and company issue warrants. So first we look at structured warrant, okay. The issuer is a third party issuers, okay. For example, we can issue warrants on Genting, on KLK stock, okay. So it's a third-party issuer, and the main purpose for us to issue this structured warrant is to provide an alternative investment tool for investor. And the tenor for structured warrants, right, are usually between 6 to 12 months, and the settlement are mostly in cash. And in terms of exercise style, right, often in European style. Okay, and there will be no impact to the company shareholding, to the listed company shareholding, the underlying company. Okay, now compared to company warrants, okay, where you can see those warrants start with WA, WB, those are warrants issued by the public listed company. The purpose for them to give this, to issue this warrant is to raise funds for the company. Okay, and the tenor is usually longer, usually 5 years. Okay, and it is usually physical setup where you can actually exercise the warrant, submit the exercise form, attach the check to get the shares back. Okay, and in terms of exercise style, is an American style exercise style. So, and there will be an impact to shareholding whenever the listed company issue a warrant and whenever the warrant get exercised. Okay, and the new share will be issued up. Okay, so these are the differences of between structured warrants and company warrants. Okay, so why actually investors should consider invest in warrant? Okay, the first thing first come into your mind should be the leverage play. Okay, and also because of low transaction costs. Structured warrants, right, enable an investor to gain exposure to an underlying security with smaller capital outlay and lower transaction costs. And in this year onwards, right, effective 1st January 2022, okay, we can see that the stamp duty imposed on share contract note for the trading of listed share on Bursa actually increased to 15 bps from 10 bps. Okay, so, and also the maximum amount of the stamp duty, right, is now capped at 1,000 per contract note compared to the previous capping of 200 in last year. Okay, that is quite a huge increase. And for illustration purposes, we actually came up this example. Okay, so last year, if let's say you bought KLK at this price, 26.34 ringgit, and let's say you bought 10,000 shares, your gross amount, okay, is 263,400. Your stamp duty that you need to pay is only 200. But from this year onwards, the stamp duty, because of the increase in stamp duty, okay, your transaction costs actually increase, okay, substantially from 200, okay, same amount, okay, you need to pay 395, almost double up. So if let's say, okay, you buy call warrant, okay, to get exposure of KLK, okay, you choose to buy KLK C11. First thing first is you can see capital outlay is way lesser. Hence, your stamp duty or your transaction cost also will be lower. Okay, so this 200,000 quantity here is because KLK 11. Okay, the exercise ratio of KLK C11 is equals to 20 warrant per KLK shares, and we ignore other grades. Okay, if let's say we want to have a perfect hash, even if we increase this quantity to 300,000, okay, the stamp duty is still lower compared buying the mother shares. So this is one of the selling point for this year. Okay, why investors should consider invest in structured warrant if let's say you want to gain exposure on some of the underlying instrument. All right. Okay. So the second part is that the second point is that invest in structured warrants, right? What you can get is an unlimited upside and limited downside features. Okay, and your maximum loss, right, is actually capped at the price. Okay, the purchase price that you paid. Okay, for the warrant, that's your maximum loss already. Let's say you buy a warrant at 5 cents. Okay, the maximum loss that you can have is only this 5 cents. But if let's say the underlying instrument price keep going up, right, there's no ceiling price for this warrant. I mean, it can just go all the way up, and we experienced this in 2019 or so. I mean, the obvious one was in all these glove stocks. Okay, we actually saw some of the warrant traded as high as above 10 ringgit. Okay, similar like the underlying shares. Okay, so this is also one of the advantage where you invest in structured warrants. In terms of liquidity, I mean, CMB, for all the CMB issue structured warrant, we are the market maker. So we will always provide a competitive bid-ask prices for all our issued warrants. And compared to share margin financing, right, invest in structured warrant also, you won't get margin call, you don't have processing fee, rollover fee. Okay, but one thing you need to take note is that some of the issuer, okay, they may have this exercise expenses. Okay, I will talk a bit more on that later on when we talk about the cash settlement amount. Okay, but compared to share margin financing, also invest in structured warrant, okay, you have a very limited downside, no collateral required, potentially higher leverage. So that's the second session that we want to talk about. Okay, why invest in structured warrant and what are structured warrant about. So in the next session, okay, I think this is the most important part where lots of people may not be able to fully understand previously. So is that what actually the factors that driving the warrant prices? Okay, because the changes of the warrant price, right? Okay, most of the time is of course the direct one is the underlying instrument price, but it's not only that. Okay, the changes in the underlying instrument price is one of the factor, and also okay, you need to know is that volatility, dividends, interest rate, and tenor from all the from this underlying instrument, okay, will also have an impact on warrant prices. Okay, the first thing first is the underlying price. Okay, whenever the underlying price go up, call warrant price will definitely go up, and put warrant price, okay, will go down. In terms of volatility, right? When volatility go up, right, call warrant and put warrant price will go up as well. Okay, so whenever this underlying instrument become more and more volatile, okay, assuming all other factors remain constant, right, the call warrant price will also go up. I mean, the structured warrant prices, put warrant as well. Okay, so in terms of dividends, when dividends go up, the call warrant price will come down, and also put warrant price will go up. Okay, interest rate wise, when interest rate is increasing, then the call warrant price will go up, put warrant price will come down. Okay, tenor wise, it's the same. I mean, structured warrant, the tenor can only be decreasing. So when tenor is decreasing, the time value also decrease. So the call warrant price and put warrant price will decline as well. So these are the factors that going to affect the warrant prices. All right, but sometimes I think you will see that when you are comparing warrant A and warrant B, right, of the same underlying instrument, you notice that warrant A price move faster than warrant B. Why is that so? Okay, why actually call warrant of the same underlying instrument reacted differently to the changes of the underlying instrument price? So I think most of the investors don't really understand on this effect. Okay, so first we need to know what is moneyness first. Okay, because how the warrant price, I mean, how the change in underlying instrument price will affect the warrant price, partly also depending on the moneyness. Okay, so first we look at what is call warrant moneyness means. Okay, in the money, it means that the underlying instrument price is greater than exercise price. At the money, okay, it means that the underlying instrument price is equal to exercise price. Okay, so for example, let's say the call warrant exercise price is at 1 ringgit. If the underlying instrument is at 1 ringgit also, then this warrant, it means it is at the money warrants. So out of the money call warrant, okay, it means that the underlying instrument price is actually lesser than the exercise price. Okay, so put warrant is just the opposite. Okay, when the put warrant is in the money, right, it means that the underlying instrument price is lower than the exercise price. And also at the money is the same. Okay, it means that the underlying instrument price is equal to exercise price. And when it comes to out of the money warrant, put warrant, okay, it means that the underlying instrument price is higher than the exercise price. Okay, so this is what moneyness means: in the money, at the money, and out of the money. So just now we say why actually some of the call warrants of the same underlying may react differently to the changes of the underlying instrument price, right? That is because, okay, if you look at this payoff diagram of a call warrant, okay, we just look at the call warrant, okay, for ease of reference. Okay, so this is the warrant price at expiry. Okay, if let's say when come to the expiry date, the warrant is out of the money or at the money. Okay, the intrinsic value of this warrant is 0. So you will only get back cash settlement amount whenever the call warrant is in the money. Okay, but whenever the warrant is trading in the market, it is still live, right? Before expiry, the warrant price will always, not always, okay, it will sell higher than its intrinsic value, okay, because the warrant price also, in this blank space here, okay, we have the time value, okay. So even though out of the money warrant, when it comes to expiry, the value is equal to 0, but when it is trading at the market, we still need to sell at some price, like maybe 1 cent or 2 cents, right? Okay, so when this out of the money warrants, right? Okay, the sensitivity of this out of the money warrant react to the changes of the underlying share price, right? Okay, it will be slower compared to a dip in the money warrants. So if you look at this dotted line here, right? Okay, you can see that from out of the money all the way to in the money, this dotted line, okay, is going steeper and steeper. Okay, so sometimes some of the investors, they like to buy all this half cent or 1 cent warrants. Okay, but after they bought it, and then they notice that, hey, how come this warrant, like the price not moving? But that is because they are buying a warrant that is very far out of the money. When we talk about very far out of the money warrants, right, it is usually like 40 or 50% below the exercise price. Okay, and usually, okay, those warrants are near expiry as well. So it means that the probability for this warrant to become in the money is also very low. Okay, so most likely this 40 to 50% out of the money warrant, it will just expire worthless. Okay, so this is also one thing that you need to take note. Okay, so before you buy those warrant with half cent or 1 cent, make sure you check the expiry date, and also the exercise price, is it very far from the current price? Okay, and a shorter tenor, okay, and dip in the money warrants, right, are more sensitive to the changes in the underlying price in absolute terms. Okay, means when the warrant price, when the share price move up 1 cent, the warrant price, a shorter tenor, dip in the money warrants, okay, will also most likely move up 1 cent, assuming the exercise ratio is 1:1. Okay, so this also this diagram, okay, explain why sometimes you can see some of the warrant prices move slower compared to another warrant. All right, so I think you will get a much more clearer picture after this. Okay, so the next thing we want to talk about is the intrinsic value versus extrinsic value, or also known as time value. Okay, first we look at what is intrinsic value. Now, intrinsic value of a call warrant, right, is the positive difference, okay, between the underlying instrument price and the exercise price of a warrant. So, and also, if let's say when we calculate the intrinsic value of a call warrant, okay, make sure you adjust the, divide by the exercise ratio as well. Okay. So when we talk about time value, okay, time value or extrinsic value of a call warrant, okay, can be also thought of as the amount where an investor is willing to pay for potential upside above the intrinsic value. So you can calculate time value of a warrant, okay, by using the warrant price multiply with the exercise ratio, and then you minus off the intrinsic value. Okay, so that is how you get the time value. So time value of a call warrants, right, sometimes can be negative as well. Okay, when can be negative as well. Okay, when the warrant price is lower than the intrinsic value. This can happen to a European style call warrant. Okay, to a deep in the money European style call warrant. and it is when the underlying instrument pay high dividend yield. Okay, so when a underlying instrument, okay, they suddenly declare a very high dividend, okay, then this this European style call warrant, okay, the time value of this European style call warrant can be negative. It can happen, although it is not that often, but previously we still can see some of the warrant trading at negative time value. All right. So now this is one of the pop quiz. So I will give you like 1 minute to look at this table. So maybe you can put in the chat box, okay, what is the intrinsic value and time value of this hibiscus C22? Do you guys need to look at the formula again? Okay, so let's see who's the first one that put in the chat box. Okay, this one is quite easy because we use the example of a warrant that have an exercise ratio of 1:1. Some more the exercise price is 1 ringgit. Come on. I think some of you may be a little bit too shy.
Maybe too complicated. Okay, we got some answer already.
20 cents, yeah, okay. Yeah, the intrinsic value is 20 cents. Okay, how we get this 20 cents is, remember the formula just now, we use the underlying instrument price, 1 ringgit 20 cents, minus off the exercise price, 1 ringgit. So we get, and of course, the exercise ratio is 1:1, right? So the intrinsic is 20 cents. And the time value is 4.5 cents. So the warrant price rate, okay, now you can understand that in all warrant, okay, the warrant price is actually contain the intrinsic value and also the time value, okay. But now, if let's say, now I change the exercise price, okay, to 1 ringgit 30 cents. So what's the intrinsic value? Let's say this hibiscus C22, right, is 1 ringgit 30 cents. What is the intrinsic value? Okay. So when the exercise price, okay, remember the moneyness, right? Okay, when it is out of the money, the intrinsic value is not negative one, it's just 0. Yeah, Stephen got it right. It's just 0. So if let's say this hibiscus C22, right, the exercise price is 1.30 cents, and the warrant is trading at 24.5 cents, it means that the intrinsic value of this hibiscus C22 is 0. So this 24.5 cents is purely the time value or extrinsic value. Now you need to understand this because this is quite important later on. I will show you how professional trader choose a warrant. So you need to know how to calculate the intrinsic value of a warrant, all right? Now we move on to the next one. So in this next section, right, we're going to talk about the common mistakes in selecting structured warrants and how professional trader invest in structured warrants. I mean, I've been doing this in the past 5 years. Sadly to say is that until now, there are still quite lots of investors, they don't really like understand what structured warrant is and how to invest in structured warrant. And the worst thing that we want is they listen to some of their friends and make the wrong decisions and end up they lose all their capital. There was one time, okay, one uncle actually called me. I mean, he called me and said that he actually bought a warrant, and the figures that he invested in a warrant is over 5 figures. Okay, that is quite a huge amount of money, okay, for normal people. So then he said he wanted to check what's the cash settlement amount because the warrant already expired. Then after we checked, and I told him that the warrant is out of the money. Then this uncle actually said, "Iman, how come?" Then I just explain how we calculate the cash settlement thing that I'm going to explain to you later on. But after that, I asked him, I mean, what actually makes you wanted to invest in this warrant? And he said he didn't consider too much, or he never really checked the details. He bought that warrant just because his friend told him that he can make some money out from this warrant without knowing the full details, okay, without checking when's the expiry date and also the exercise price. So this is all the very common mistakes that we can see happens in retail investor. Okay, so I hope that after this sessions, you have a more clearer picture when selecting in warrants. Okay. Now, the first mistake, okay, is that most investors, right, they tend to buy structured warrant with the highest trading volume. Now, you need to know and need to understand one thing is that high trading volume is not equal to high liquidity, or we can also say that high trading volume may not equal to high demand as well, because you don't forget that market maker is also probably is buying and selling the warrant. Okay, so a structured warrant, right, with low trading volume, it doesn't mean that there's no liquidity. So you need to get the concept right, is that trading volume is not equal to liquidity. Okay, liquidity is the bid and ask price is always there. It's very tight for you to easily buy and sell the warrant. That's it. Okay, liquidity is not means that high trading volume. Okay, you just need to remember this. So long as the issuer, okay, and will ensure that the tight bid-ask spread like CMB, okay, we always make sure that our bid-ask spread is tight, unless like what we explained just now. If let's say the underlying instrument is not liquid, then you may see the bid-ask spread of the warrant is a little bit wider. Okay, but at any time, okay, if you notice that the bid-ask spread is wide and you wanted to check further, you can always call or email to us as well. Okay, but you need to remember, high trading volume is not equal to high liquidity. Okay, don't go and buy a warrant because you see this warrant has a high trading volume. Okay, so this is very common, and also we saw a lot of retail investors make this mistake as well. Now, the second mistake is that many investors are attracted to warrants with high gearing ratio. Okay, now you have to understand that high gearing ratio is not equal to high returns. Okay, first you need to look at how actually we calculate the gearing ratio of a warrant. Okay, so gearing ratio of a warrant, okay, how we calculate is we use the underlying security price to divide the warrant price, multiply the exercise ratio. So in this case, the gearing ratio will be higher if, let's say, this warrant price is lower. Okay, and when this warrant is trading at a very low price, like half or 1 cent rate, then that is when you usually see the warrant with a high gearing ratio. And this warrant, okay, those warrants that trading at half cent or 1 cent are mostly far out of the money and expiring soon. So if let's say this warrant is trading 40% out of the money, so the first question that you need to ask yourself before invest is, how come, what are the probability for this underlying share price to go up 40%? Let's say this warrant is going to expire within a month. So you need to ask yourself, what is the probability for this warrant to move up 40 or 50% in a month? Okay, and also that's why you always need to remember that high gearing ratio is not equal to high return. Okay, just don't buy a warrant because of a high gearing ratio. Now, before we move further to introduce, to explain to you how professional trader choose a structured warrant, first we need to know one thing, which is implied volatility, and this is very important. Okay, because all the professional option traders, okay, will also look at this thing. In layman term, right? Okay, implied volatility is a figure or function, okay, that summarize all the factors such as the warrant price, exercise price, tenor, interest rate, dividend yield, and underlying security price. Okay, it summarizes all these factors, the relative value for money of the warrant into one number. Okay, so when we want to issue out a warrant, right? Okay, we need to determine the warrant price, correct? So how we price a warrant is that we need all these factors. And you can see that the important thing is we need to know what's the volatility of the underlying instrument as well, okay, in order for us to come out a warrant price and list it in the market. Okay, this is in theory how an issuer price a warrant. But in reality, most of the time when you can see in your trading screen is when the warrant is already listed in the market and you already know the warrant price. Okay, so you already know the warrant price and you also know all the features, all the factors like the underlying security price, exercise ratio, interest rate, expected dividend, expiry date, and also the warrant price. But one thing that you need to find out is the implied volatility of the warrant. Okay, so you need to find out, okay, the implied volatility of structured warrant of the same underlying instrument and pick the warrant with the lowest implied volatility. Okay, so in this example I'm going to show you is when you are comparing two call warrants of the same underlying instrument with the same exercise price, exercise ratio, and tenor. The call warrant with a lower warrant price rate will have a lower implied volatility. So for illustration, let's say you are comparing ABCC1, ABCC2, right? You can see the share price same, okay, of course, the same underlying instrument, you need to compare. Same exercise price, exercise ratio. So if you have these types of warrants, when you're comparing same exercise price, exercise ratio, and tenor, you will notice that the warrant that are trading at a higher price, right, will have a higher implied volatility. Okay, and if you go and calculate the intrinsic value and time value again, you will also notice that this ABCC2, the time value is higher because you are paying higher warrant price, right, to buy a warrant with the same features like a ABCC1, which is trading at lower price at 5 cents. Okay, so when you invest in warrant, make sure you compare warrant of this same underlying instrument and similar moneyness and tenor. This is very important. Okay, so we also list down some of the step or rule of thumb that you can use as a reference. Okay, so first thing first is that you need to choose. Let's say you want to buy call warrant. Okay, we just look at the call warrant first. Okay, you need to choose an underlying instrument with a bullish trend. Okay, so when you want to buy a call warrant, okay, you need to have a view on this underlying instrument. Okay, you don't buy a call warrant simply just buy because of trading volume or high gearing ratio. Okay, when you choose a warrant, make sure that you are expecting this underlying instrument, okay, to have a bullish trend, and don't buy the warrant if, let's say, you don't like the underlying instrument. Okay, you can just avoid it and choose another underlying instrument. So let's say after you determine that you wanted to buy a warrant for a KLK, right? Then you need to choose an issuer with proven track record, strong credit rating, and established local presence. Okay, and also when you are comparing warrants, make sure you compare warrants of the same underlying instrument with similar moneyness and tenor. And the number 4 is that, okay, you should choose the call warrant with the lowest implied volatility. Okay, so this is a general guide for investing in warrant. Okay, now, so this is also one more exercise for you. Okay, you can see we choose those exercise price that are near the underlying share price. Okay, I think recently in February until March, plantation stock and oil and gas stocks are quite popular. Okay, so you can see we have 3 hibiscus warrants here. Okay, with different exercise price, exercise ratio. Okay, so if you go through all this data, right? Okay, when you look at all this data in your screen, you may get confused, okay, at first. So let us compare one by one. Okay, first, we need to normalize the warrant price, okay, because by just looking at the warrant price doesn't tell you much. Okay, so you need to also multiply the warrant price with the exercise ratio to get this normalized warrant price. Okay, if we look at this normalized warrant price, right, we know that hibiscus C29 is cheaper, but in terms of tenor, C28 has a longer tenor. In terms of gearing, C29 has a higher gearing. Money premium wise, C28 and C29 are the same. Moneyness, C28 is at the money. But after you compare all these figures, right, you may get confused as well. So what normally professional traders do is that we will just pick few warrants with similar moneyness, exercise price, and exercise ratio, and the tenor as well. And we choose the warrant with the lowest implied vol. Okay. And why actually professional trader use implied vol to choose a warrant? Okay, we have this example here. So this is a very good example that we captured in year 2020. Okay, so you can see that we have top low C61 and top low C55. Okay, and you can see the price of all this. If you look at the implied vol, C61 is higher compared to C55. Okay, let's say you didn't check the implied volatility of the warrant, and you buy top low C61 because it has a very attractive trading volume, and ended up the result can be very different. Okay, you can see that. Okay, after this warrant, both warrant expired on the same date, 28 February 2020. Okay, the cash settlement price is a bit different. Okay, from C61 and compared to C55. Okay, this is because they are using different method to calculate the cash settlement amount. So after you use this cash settlement amount, okay, we normalize again the exercise ratio, and you minus out the holding capital cost. Why we want to minus this is because let's say let's say this money you invest somewhere else, you probably will get some interest rate. Okay, so there are some holding costs for your investment. So we minus assuming this holding cost is at 5% per annum. After you minus out everything, you can see that top low C61, okay, the return is 146, whereas this top low C55 is 251%. So in this comparison, right, okay, we can see that the attractiveness of a warrant can be determined by its implied volatility. And that also explains why, right, even issuer like us, right, when we choose a warrant at time, we also choose warrant with the lowest implied volatility. And in this case, okay, we can also see that if we invest in a mother share, okay, if we invest in a mother share top below, right, the return that we can get is 20.5. So this also gives you an overview, okay, on what warrant can do. Okay, if let's say, like what Shane said just now, if let's say the underlying instrument price is moving to the direction that you expected, okay, you can actually have a unlimited upside. Okay. So understanding corporate action and the expiry process is the last topic that we want to go through. Okay. So first of all, you need to understand that a structured warrants exercise price and exercise ratio will be adjusted whenever the underlying company undertakes a corporate action such as bonus issue, share split, share consolidation, capital repayment, and rights issue. So whenever we have these types of corporate action, then we will also adjust the exercise price and exercise ratio of the warrant. Okay. However, for special dividend, the exercise price and exercise ratio of a structured warrant will only be adjusted if, let's say, the adjustment amount more than 2% of the exercise price and exercise ratio being changed. Okay, if less than 2%, then we won't actually go and adjust the exercise price and exercise ratio. Okay, so you need to take note that the exercise price and exercise ratio will not be adjusted. Okay, if let's say the underlying company makes an announcement for the payment of ordinary dividend. This is because just now, if you remember, okay, what the issuer require when we price a warrant is we already price in this dividend. Okay, so we already price in the ordinary dividend. If let's say we don't price in the ordinary dividends, right, then the warrant price will be higher. You will need to pay higher price to buy the warrant. Okay. Okay, so we won't adjust the exercise price and exercise ratio of a warrant if let's say it is an ordinary dividend, whether in the form of cash dividend or share dividend. Okay, so that's the corporate action, how it affects warrants. Okay, and what do you need to know when a warrant is expiring? One thing we want to remind you again is that all warrants have a finite lifespan, which is up to its expiry date. So you need to be aware that the last trading day of a warrant is the second market day prior to its expiry date. In layman term is T minus 2. Okay, so T day is the expiry date. Let's say it is 30th. Okay, 30th of the month. Then the last trading day will be 28th. So on 29 onwards, this warrant will be suspended. Okay, you will no longer be able to trade the warrant in the market. So a cash-settled European style warrant will be automatically exercised. You don't need to do anything. Okay, and if the cash settlement amount is greater than 0, okay, you just need to wait for us to pay you the cash settlement amount. Okay, within 7 market days. Okay, you will receive the cash settlement amount. So how actually we calculate cash settlement amount of call warrants and also put warrants? So these are the formula. And in this formula, you can see that the number of call warrants you already know, exercise price, exercise ratio also you already know, and also the settlement exchange rate. Okay, we will also announce the settlement exchange rate if let's say it is a foreign underlying. Okay, but most important thing that you need to know is how actually issuer calculate the closing price. Okay, this is the most important thing that you need to take note and check in the term sheet. Okay, and just now we mentioned that some issuer, okay, they may also deduct some exercise expenses. From what I know is usually some issuer, they will deduct about 0.3% of the cash settlement amount as their exercise expenses. But for all CMB issued structured warrant, we don't actually deduct this exercise expenses from the cash settlement amount. So we will absorb it. So you will get a net cash settlement amount if let's say you are buying the CMB issue structured warrants. Okay, so now we need to look at how actually the issuer determine the closing price. So if let's say the underlying instrument is a share, it's a stock, okay, there are 3 methods. Okay, the first one is the issuer can determine the closing price by using the 5-day average VWAP price of the underlying security. Okay, 5-day average VWAP price before the expiry date. Okay, the second method is the issuer can also determine the closing price by using the 5-day average daily closing price. Okay, this is important to take note. Okay, this is just based on the closing price of the underlying security. Okay, 5-day average daily closing price of the underlying security before the expiry date. And the third one is the issuer may also determine the closing price based on the closing price of the underlying security on market day immediately before the expiry date. So in this method C, it means that they will just based on the T-1 closing price to determine the closing price or the settlement price. Okay. For our CMB issued warrants, we determine the closing price, okay, based on the A method, okay, 5-day average VWAP price. So if let's say if let's say determine by using the B method, right, then you need to take note because for some illiquid underlying instrument, it will be very easily the closing price may be affected if let's say some of the big shareholders, they want to sell off a large chunk of shares in the closing sessions. Okay, so before you buy a warrant, make sure you check the term sheet how the issuer calculate the cash settlement price. All right. Now, if let's say the underlying instrument is an index, right? Okay, how we can determine the closing level of an index is the issuer can determine the closing level based on the closing level of the underlying index on the market day immediately before the expiry date, meaning is T minus 1. Okay. Now, B is the second method is the issuer can also determine the final settlement price, setting the corresponding index futures contract on the expiry date. This is on the expiry date, and it's also based on the futures contract, the index futures contract. Okay, the first one is based on the index that you can see, the cash index we call it. Okay, the FPM KLCI that you can see in the market, in the Bursa market. But the B is based on the futures, the index futures contract. Okay. Now C, the third method is the issuer can also determine the closing level based on the average of the closing level of the underlying index for the 5 market days prior to and including the market day immediately before the expiry date. Now, what we can see in the market right now, most of the issuer, they are using the B method to determine the closing level for the index warrants. Okay, so CMB also determine the closing level of an index based on method B. Okay, so this is the whole session for today. I think we will go into this Q&A session, right?
Yes, that's right. So thank you so much, Yiman, for sharing with us the A to Z about structured warrants. I guess many of us here are still digesting all the algorithm and mathematical formula that you show and trying to make sense to the best of our capability. So, but don't worry, we have a webinar recording link to be sent to you tomorrow if you're registered for this. So yes, you'll be able to catch it and refresh it and slowly watch it so you can get a better idea of what Yiman was trying to say. So don't worry, don't freak out. Okay, just take it slow. All right. So yes, thank you so much, Yiman. This was really very technical. Okay, so the whole idea, the key idea that I got from this session is that if for a retail investor, right, it's best that we pick warrants with lower implied volatility. Am I right?
Yeah, of course. So you need to pick the warrant with the lowest implied. Well, of course, you need to choose warrants with similar moneyness and tenor. Okay, make sure you choose warrants with similar moneyness and tenor when you're comparing warrants. Okay, and of course, you don't compare Tenaga warrant with MyEG warrants, right? You always need to compare same underlying instrument. So this is also one thing that you investor need to take note.
Okay. So if you have any questions to ask our speaker today, please write them in the Q&A box. So I'm sure that you all have burning questions to ask, right? So you may write them in the Q&A box while we will attempt to address them. Okay. So I think this question you probably get it a lot, Yiman. I've also worked with other issuers before. So this question is why CMB equity why CMB does not have live matrix? Why should we pick warrants that have no live matrix? Could you share with us?
Okay. One thing I think some investor need to take note is that live metric, okay, may actually use for a reference. Yes, but if you read, the fine line or this disclaimer, right, you will find out that actually live metric may not be that reliable when you need it the most. Okay, especially when the underlying instrument is very volatile. Okay, and one thing also investor need to take note is that all these tools, right, is only for you to use as a reference. But at the end of the days, right, the warrant prices, okay, or the call warrant prices, is actually tracking the underlying instrument price. Like for example, I think in February, if you are monitoring plantation stocks like Sunplan, right, you can see that Sunplan, our CMB issued warrant Sunplan CZ, okay, if you are comparing like before the Sunplan share price start moving up until it move up like above 5 ringgit, right? You can see that our warrant move up quite a lot as well. And I saw someone posted in their forum saying that our Sunplan CZ actually move up over 600% in like 1 to 2 weeks time. Okay, so and to be frank, I mean we don't really provide the live metric, yes, but I mean our warrant are still tracking the underlying instrument price, and if I'm not mistaken, in terms of the price movement, right, our Sunplan CZ is one of the highest, the top gainers. I mean, if you're comparing that during that period, yeah.
I see. So is it in your pipeline to launch it anytime soon or no? Or is it not in the pipeline?
We actually, I mean, we discussed this before, but one thing is, you know, last time what happened, I think, is it last year? What happened to this, I mean, issue happened to this Serba dynamic can also happen to other underlying shares, right? So I think some investor also got trapped on this when the Serba dynamic price tanked, and I think some investors also call us, and they realized that this other issuers warrant, their prices are not tracking the live metric, and they thought we are the issuers. Okay, so the last thing that you want is we do not want investor thought that I mean the prices of this warrant price is guaranteed. Okay, it's guaranteed according to the live metric. I mean, we don't want them to have this perception. Yeah, and as a market maker, right? The role of market maker is actually to provide a very tight bid-ask spread on the warrant. Okay, we provide the liquidity is for investor to easily buy and sell the warrants. Yeah.
Okay, thank you so much, Iman. Now we know that structured warrants have issuer, and your issuer will market make for the products that you issue. So in what circumstances will you suffer huge losses if you have hedged?
Yeah, it's like what I mentioned just now. If let's say there are a sudden spike in volatility, or there are sudden change in the underlying share price, a huge change, then most likely, okay, most issuer will suffer losses. Okay, because I mean, when the war spike, okay, definitely they need to rehash or unhash their positions, right? Yeah, that is when most issuer may suffer losses. Yeah, so our risk, right, is also like similar like the investor. For investor, you are buying warrant. For example, if let's say you buy the warrant at 5 cents, the maximum loss you can suffer is 5 cents, right? But for issuer, we are buying the share. Okay, so let's say if that time when Serba dynamic, the share price tanked, I think Serba trading near 2 ringgit. So I mean, the share price can just drop from 2 ringgit down 30%, another day down 30%. So that is what an issuer can suffer as well. Yeah.
Okay, so every time like the volatility spike, right? You will definitely experience losses, or will it be to the surprise that you will get huge gain as well because of you know, maybe over hedging, or you know?
Yeah, I mean, it depends. It depends on the position. Yeah.
So it could surprise to the upside also, huh?
It could, yeah.
All right, understand. Okay. The next question is by KC. Recently, there was a put warrant on Hong Kong index which limit down and cannot sell. What is the reason behind it? And how do we check the issuer's track records?
I think first thing you need to check which warrant and whether that warrant is it hit limit down. I mean the price, is it hit limit down? Or because when it hits limit down, we may not be able to put in the bid-ask spread as well. Yeah. So whenever we are not able to market make on that Hang Seng warrants or a particular warrants, right, we will always make an announcement in the Bursa website. So you can just look at the Bursa website, go to the structured warrant announcement session. Yeah.
So how do you check the issuer's track record?
You mean like our market making track record?
I believe so. If that is what
Yeah.
KC's now is asking.
Actually, on a monthly basis, all issuers are required to publish their monthly market making activity. So in that report, you can see how much we bought and sold for a particular warrant that we issue, for all the warrants that we issue. So you can also read the report that we publish on every month in the Bursa website as well.
Okay. What Lai would like to ask, what happens to warrant price on dividend X date of the underlying share?
Okay, I think what Lai probably asking ordinary dividend, right? For ordinary dividends, there will be no impact because we already factor in the dividends. If let's say it is a special dividend and that we need to adjust the exercise price and exercise ratio, okay, that is, I mean, in terms of the warrant price, there will be no impact as well. That's why we need to adjust the exercise price and exercise ratio. Okay, if let's say for special dividend that's going to affect 2% or more of the exercise price and exercise ratio changes. Yeah.
Okay, so every time there is a special dividend, you will adjust the exercise price of the warrant, right?
If let's say, I mean, the changes is amount more than 2%.
2%, If less than 2%, then you absorb.
Yeah,
Is it?
right. I mean, not absorb, it's just that we won't change, I mean, we won't adjust the exercise price or exercise ratio. Yeah.
Okay, I see. But the next day, will the metric change because of the changes in the dividend?
I think, Shane, what you mean is like whether it will affect the warrant price, right? Yeah, I mean, it won't really like affect the warrant price just because of this special diff. And even if I mean, even if this special diff is amount more than 2% of the exercise price and exercise ratio being changed, right? That's why we need to adjust the exercise price and exercise ratio. Yeah.
Okay. Now you say that you already factor in the dividend, expected dividend when you are pricing the structured warrants. But let's say if you just expect it to be 10 cents per share, but at the end they announce like 15 cents per share, would you also adjust your exercise price?
For all ordinary dividend, we won't adjust. But if let's say what Shane you are talking about is the ordinary dividends, right? Like let's say we expect 10 cents and end up the underlying company announced way higher dividends. That is when you can see the time value or extrinsic value of a warrant, okay, trading at negative value, like just now I showed you, right? Hold on. Yeah. So it can be negative for the time value. Okay, when there's some underlying security, okay, pay high dividends. Okay, this will only happen to a European style call warrant.
Okay, thank you so much, Iman.
Yeah.
Charlie would like to ask, at what circumstances do we select at the money, out of money, and in the money warrants to buy? And how does a market maker determine the exercise price when issuing a warrant?
Okay, I think there are two questions here. The first one, let me answer the first one. In what circumstances do we select at the money, out the money, in the money to buy? We don't really like look at just the moneyness. Okay, I give you a guide, simple guide. Like today, okay, if let's say Iman is going to buy a warrant, what I'm going to do, okay, or what normally professional trader will do is they will just select one stock. Let's say hibiscus, right? Just now we gave an example, hibiscus. So if let's say it's trading at 1 ringgit 20 cents now, what I'm going to do is I will pick a warrant not too deep in and not too far out to compare. So let's say I pick a warrant, those warrant that within plus minus 10%. Okay, so it's either 10% in the money or 10% out of the money. Okay, and also I compare those warrants that at the money. Okay, in between this plus minus 10%. Okay, the moneyness. So after I pick up all this warrant that fulfill this criteria, what I'm going to do is I will just pick the warrant with the lowest implied volatility. And of course, you also need to take note on the expiry date. Okay, you don't want to buy a warrant with very short tenor, like 1 or 2 weeks, right? So you need to also take note on the expiry date. And how does a market maker determine the exercise price? When we issue warrants at time, okay, like we mentioned just now, how issuer determine the exercise price is also we need to put into the consideration at whether when we set a very low exercise price, right, will it affect the affordability for investor to buy this warrant? Because if let's say the share price is trading at 1 ringgit, if the issuer is going to issue out a warrant with an exercise ratio of 50 cents, which is a very deep in the money warrant, it means that the warrant, the intrinsic value of this warrant is 50 cents. So is this 50 cents is a little bit expensive to the investor? So we need to take this into consideration as well. So sometimes we may want to, depends on the market as well, whether it is in a bullish trend or bearish trend. Okay, so if let's say it is a bullish trend, then maybe we want to set the exercise price a little bit higher than the current share price. So it will make the warrant price a little bit cheaper so that more investors can afford to buy the warrants. So that's how we determine the exercise price of a warrant.
Okay, thank you so much, Iman, for sharing with us the insights into how you determine the exercise price and what a consideration that you think before you price it. The next question is exercise price and indications of investment bank's target price. That is by Charlie.
No, not really. Yeah. So it just based on the affordability, I would say, and also, like I said, depends on the market sentiment as well. Yeah, but it's of course not our target price. Yeah.
Okay. Now, Steve Chia made a comment that sometimes your call warrants, sometimes there's no queue when the market is active. So would you clarify a little bit, like, is your call warrant bid price and ask price queued by the system automatically or is manually?
Yes, I mean, of course, all these prices are being keyed to the market automatically, and I mean, sometimes in the morning or when the market is open, of course, we all trader will notice that I mean, the latency in putting in orders is also a bit slow. But of course, I mean, if let's say you didn't notice or you didn't see the bid-ask spread of our warrant is there, you can always contact us or email us. Yeah, I mean, we always reply email quite promptly, I would say.
Okay, so for whatever warrants that you issue, there will always be a bid and ask. If there's no bid and ask, then you should email the issuers such as CIMB to get clarification. Am I right?
Yeah, correct.
Okay. Anthony would like to ask, why is there no structured warrants for crude oil?
Okay. We do have futures for crude oil, but at the moment we are still not looking at issuing warrants on commodities here. Yeah, because I think it depends on in Malaysia we don't see that much of demand yet for commodities, warrants, and I mean for commodities, of course, they can always trade in futures market, right? Yeah.
Okay. Understand. So now not really lah, huh? No intention to issue structured warrants on commodity. Okay. So we know that when investors buy structured warrants, call warrant from you, you hedge it by buying the underlying. Am I right? So if investors buy put warrants from you, how do you hedge it?
Okay, of course, when investor buy put warrant, I mean, the theory is we should also sell the underlying instrument, right? Because you are like having a short position, right? But at the moment, we don't really issue put warrant on single stock, and it is just on the index warrant. And for index warrant, we hedge it using the futures contract, which is very liquid. So there's no problem for us to have a long or short position in futures contracts. Yeah.
Okay, so that's why we hardly see issuers issue put warrant on a single
Put
stock.
warrant on single stocks.
Not many
Yeah.
lah,
Yeah.
not many.
Not many. Not
Because it's
that
very
popular.
hard to hedge. So
Yeah.
if they really do,
also,
if they really do, then how do they hedge? Like if you do a put warrant on an index futures, then it's easy lah. But if really someone do a put warrant on the underlying stock, right? How would they do that?
it depends on their position as well, because they won't actually just issue a put warrant on just one single stock, right? Of course, they also issue call together, right? So they can manage their exposure in between. Like when they sell call warrant, they need to buy the underlying instrument, but when they sell the put warrant, they need to sell back the underlying instruments, right? So maybe net they probably don't need to do anything as well. So usually, if issuer issue put warrant on single stock, you can also see that they will also issue call warrants.
I see. So definitely got call warrant. So if they have put, okay, all right. Thank you so much for answering this. Now, just now you talk about getting the settlement price, right? There are three ways to get it. One is the 5-day VWAP. One is the 5-day average closing price. The other one is the last closing price. Am I right?
Yeah.
So and we know that when the call warrants is near the expiry, then issuer like you will dispose of the shares, underlying shares, just to maintain the right positions. So would that cause the would that cause the price of the underlying to go down, and then the structured warrant price also go down?
I mean, I'm not too sure how other issuers do their hedging, but for us, right, because we determine the closing price of our single stock warrant based on the 5-day VWAP, right? So if let's say we determine the closing price or the settlement price of our single stock warrant based on the 5-day VWAP, then we will also unhash our position using the VWAP price as well. Means that we won't just sell it one shot at the closing session. We will just sell it throughout the whole day. Yeah, because as an issuer, when we sell warrant, we buy the underlying instrument, correct? But when the time we sell it, right, of course, we also don't want to experience huge losses, right? So as much as we can, we try to sell or unhash this position for all this expiring warrant throughout the whole day. Yeah.
So when will you start to sell your underlying shares, the mother share? Is it within the 5-day, or it could you could unwind the positions much earlier than the last 5 days?
Of course, I mean every day, right? After we issue out the warrant, every day the market maker also buying and selling the underlying instrument. That is understandable, right? So when we unhash all this expiring warrant, okay, those positions, we will also unhash it during this 5 day when we are calculating the VWAP price. Yeah.
So it will be done on the last 5 day lah.
Yes.
So if I see that the warrants is expiring soon, so I need to be aware that probably this during the last 5 day, then the mother share could really drop for a bit because there could be huge.
Not
volume.
really also, because of course, let's say we have one warrant expiring, but we will always replace it with a newer warrant, right? So it doesn't mean that we need to, like, in this 5 days sell out everything, right? Because we are selling the newer call warrants, which we also need to maintain the hedging. Yeah, you understand, right?
Okay,
so it doesn't mean that when come to this the final 5 day or this expiring process, it doesn't mean that we just sell out everything. No, yeah, because we always have a replacement for the expiring warrants. Okay, so it doesn't mean we need to sell out everything at one shot.
Okay. So when the put warrant and call warrants are sold out, does that mean that you will cease to become the market maker? So this question is by Ka Sing.
No. Okay, it's just that we may not be able to market make, but what the issuer can do is that they can actually, for CMB warrant, for all the issuers, okay, they can actually consider whether to do a further issue or not to increase the issue size so that they can market make it again. Or another way is that they can also consider buying back the warrant from the investor.
Okay. So how many units do you refresh your bid ask position? What does low inventory mean? So this question is by Lim.
How many units? Okay. I think what Charlie means is what is the minimum unit, right? In the bid ask position that the market maker need to put in. In the latest requirement, the market maker need to put in at least 50 lots buy sell, and the maximum spread that the issuer can do for one warrant is 10 bid size.
Okay.
Yeah.
So what does low inventory mean?
What does low inventory means? Okay, usually when an issuer are experiencing low inventory, right? Like when we almost sold out the whole issuer size over like 90%, then an issuer will usually make an announcement in the Bursa website saying that they are having low inventory and they may have difficulties in doing this market making for this warrant. So investor need to take note.
Okay. The next question is, if I'm holding in the money call warrant and it is expiring, do I jump over to another call warrant with longer expiring date, or should I stay put with my existing positions to expiration? How should I manage this?
This depends on what's your view on the underlying instrument price. All right. Of course, if you think that this is already at the peak and you wanted to take profit now, of course, you can just sell back the warrant to the issuers or just sell it to the market to other investors who wanted to buy it, right? But if let's say you think that, okay, this warrant is expiring maybe next week or next 2 weeks, but I still want to get an exposure on this warrant. So what you can do is you just sell the warrant, take profit on your existing warrant, then you buy a newer warrants of the same underlying.
Okay. Stefan would like to ask, if there are any questions or inquiry, what are the contact details for CIMB during the market hours?
Okay, you can always email to us. Yeah, just email your inquiry to this email address. We usually respond quite fast. You see for general inquiry, we usually respond within the same day. most of the time. Yeah.
Okay. Yeah, we know that Iman, we know that you don't take a positions directional view for all the warrants that you issue. So could you tell us like how do any issuer make money from structured warrants?
Okay, like just now we said we have of course when we buy sell, when we do the hedging that time, right? When we buy sell the underlying instrument, there will be some profit and losses there. Okay, this is one, and also like just now we show you all the warrant will have a time value, right? So that is also the time decay. So issuer can also earn from this time decay as well. Yeah.
So time decay is what you earn, huh?
Yeah, that's why when you, of course, that's why we say when you pick a structured warrant, you should choose a structured warrant at the lowest implied volatility, because if let's say you buy warrant with higher implied volatility, it also means that you are paying higher warrant price, and that also means that you're paying higher time value, right? If you're comparing warrant of the same features, like same exercise price and banner. So that's why you should always check the implied volatility to know the I would say the valuation of the warrants. Yeah.
All right, thank you so much, Iman, for bringing to us this session, investing in structured warrants. I think we all now have become a better investors when it comes to understanding, structured warrants much better.
Yeah.
All right, let me share my screen. So, yes, Bursa Academy. Again, this is Bursa Academy. It's comprehensive one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. So if you want to look for more investing resources about stocks or even structured warrants, you can actually visit Bursa Academy at www.bursaacademy.bursamarketplace.com. We have a lot of information about stocks and structured warrants on the platform. So it's very user-friendly, simplified, and can accessible anywhere, anytime at your own pace. So for our next webinar, it is titled Persediaan Perdagangan yang Penting Diketahui. So it's happening on the 1st April 2022. It's Friday, 8:30 to 10 o'clock. So I've given you the registration link. So you may go ahead and register if you want to learn about, what should investors and traders prepare before we enter any trade. So this will be conducted in BM. All right. So, ladies and gentlemen, you just heard from Mr. Tan Yiman, the Associate Director of CMB Group Treasury under the Equity Derivative team. So, thank you so much, Yiman, for sharing with us investing in structured warrants. I think today we are bombarded with a lot of technical information about warrants, and so I think we are a better investor right now when it comes to investing in structured warrants. So, thank you so much.
Yeah, thanks, James. And once again, I want to thank Bursa Malaysia team. So I hope all of you, after this session, you will be able to make a better decision when investing in warrant. So thank you, everyone. Thank you for your time.
Yeah, if one thing you need to take away is always look for low implied vol. That's what I learned from Iman. Okay, low implied volatility. Okay, thank you, everybody, and have a great rest of the day. Bye. See you on Friday.